Bitcoin is in a bear market, so how low can its price go? Historical market data going back over a decade is pointing to around 40K or slightly under. So here's why several analysts are in agreement with this, and stay tuned till the end where we lay out the potential bull case as well. To start, these two metrics have called every Bitcoin bottom for over 10 years. The first one is realized price. It is dynamic, and right now that is sitting around $54,000. It's basically the average price the market actually paid for every Bitcoin in existence. When Bitcoin is trading above that number, the average holder is in profit. Below it, the average holder is underwater. And then the second one, and that is balanced price. And that is around 40K today. This one adjusts for coins that have been sitting still for years. If a Bitcoin hasn't moved in 5 or 6 years, it's basically locked supply and not part of the active market. Balanced price weighs those coins down, and what you're left with is the true cost basis of the coins actually trading. In every midterm year, 2011, 2015, 2018, 2022, Bitcoin first breaks below realized price and then drops to or below balanced price. And that is where bottoms form. In 2018, balanced price was around $4,000 and Bitcoin bottomed at $3,200. In 2022, balanced price was $15,900 and Bitcoin bottomed at $15,700. At the time of shooting this video, Bitcoin just rejected off its 200D moving average at around 82K. Now that is 20K plus above realized price and around 40K above balanced price. In every midterm year, it's broken below both before bottoming, so keep an eye out for those levels. And there's more evidence pointing in the same direction. Investment firm Stifel projected Bitcoin cycle low at 38K. Every Bitcoin cycle, the peak to trough drop gets about 7% shallower. 2011 was down 93%, 2015 84%, 2018 83%, and 2022 77%. So if this pattern keeps holding, this cycle should bottom around 70% down, which would be around 38K, the same zone the balanced price model landed on. Now, like we said, Bitcoin also just rejected off its 200-day MA, the line that separates long-term bullish and bearish regimes. In every bear market, Bitcoin rallies up to the 200-day, gets rejected, and breaks down from there. So this could be the pattern firing on schedule. And then there's also a timing element to this. Analyst Ben Cohen found that there was always around 140 to 170 days before lows get taken out in a bear market. Now, with the previous low formed on February 6th, that means Bitcoin might break below 60K sometime in July. And also, the order book is thinning out. In March, MicroStrategy and the ETFs absorbed 94K Bitcoin. The rest of the market sold 157K Bitcoin into that demand. Net demand was negative 63K. So what is happening is a handful of large institutions are catching all the supply everyone else is dumping. Price holds because the institutional bid keeps absorbing, but if those buyers pause, there is no second layer of demand underneath. The macro backdrop makes that pause more likely. Warren Buffett, sitting on $397 billion in cash, his biggest defensive position ever. The last 2 times he did this were pre-2000 and pre-2008. Both preceded crashes. Tech took 81,000 layoffs in Q1, the worst quarter in years. The Clarity Act is stalling in the Senate. Oil is at over $100 a barrel from the Iran war. None of this is the kind of backdrop where institutional capital expands its Bitcoin allocations. If anything, it argues for trimming. So that is the bear case, but there's also people who are more optimistic. The argument from the bulls is that this time is just structurally different. MicroStrategy has bought over 140K Bitcoin this year. Spot Bitcoin ETFs hold 102 billion collectively. Whales accumulated 270K Bitcoin in a single month earlier this year. Exchange reserves just hit a 7-year low. Coins are getting pulled off exchanges into long-term storage, which means less supply available to sell and less selling pressure overall. None of that infrastructure existed in 2018 or 2022. the buyer base has changed. And if the panic sellers already got flushed in February, what is left doesn't panic at the same prices retail does. And then on May 7th, two analysts suggested the bear market could actually already be over. Tom Lee from Fundstrat pointed to what he calls the 3-month rule. In its 16 years of existence, Bitcoin has never closed 3 consecutive positive months during a bear market. Now, March and April closed green. So if May is up, this thesis says the bear market is done. The same day, John Bollinger, the technical analyst behind the popular Bollinger Bands indicator, said his model just flipped bullish on Bitcoin and went all in. And then MicroStrategy's Michael Saylor has also called the bear market over, pointing to the same institutional shift as evidence that the bottom is already in. So that is where we are. One side is going to get proven wrong in the next few months. And by the time that you're watching this, if Bitcoin has continued trending down after its rejection of the 200 DMA, that may be a clue that we're going further down. If we bounce, the bulls may have their time. But what do you think? How low can Bitcoin actually go? Or is the bottom already in?